In this video, we're going to be telling you exactly why the housing market's going to go absolutely bonkers in 2022. And of course, that's not just going to be an opinion. We're going to use actual facts and details to support that hypothesis. So with that, let's get right into the video. All right, so why do I think that the housing market is absolutely going to go crazy when everybody's screaming market crash, market crash, market crash? Check out what's going on with loan limits right here in America. Typically, the upper end of loan limits is about $550,000. The federal government is going to start backing loans of $1 million, Fannie Mae and Freddie Mac. That means that the government expects housing prices to be here to stay, because right now people don't even need the full $1 million to buy a house, even though housing prices have gotten very expensive. But that means that Fannie Mae and Freddie Mac expect that the average homeowner is going to need to take out a $1 million loan to buy a typical house in the future. This is a regular loan. This is not a jumbo loan, and it's now $1 million for a regular loan, which means a regular house. With that, we can also see some other metrics. Check this out. Inflation. This is actually a graph of inflation over the past 25 years. And look at where we are. Look at this huge bar. We're at 6.8%, highest since June 1982. And it's the 9th consecutive month with inflation staying above the Fed's 2% target as global commodities rally, rising demand, wage pressures, supply chain disruptions, and a low base effect from last year continue to push prices up. Prices are going up. Money is being printed. When you put this much money in the system, it takes more dollars to buy the same good. The good maintains its core inherent value. The dollar has less value because there's more of it. The good, there's still limited supplies. In fact, there's even more limited supplies than usual, which is absolutely crazy. And then we can also see what else is going on in the real estate market. Investors bought a record 18% of homes on the U.S. housing market last year. And check out this little graph right here. You can see that in 2000, investors were buying under 6% of the homes on the market. Look, what's happened is that YouTube came out, podcasts came out. There's so much access to information where the normal person, you or myself, we just can invest in real estate very easily and very confidently now. We have access to information. People don't realize how the information age has diluted the opportunities that exist to make money. Investing in real estate is a great opportunity to make money. It used to be something that only people who had some kind of connection to real estate investors could learn from. Books, people, direct training. Now you just go on YouTube, learn how to invest in real estate, go on the market and buy an investment property. And a ton of people are doing that. Now 18.2% of people are doing that, which means that there's only 82% of the homes on the market for regular people who are just looking to buy a house to live in. So another example of how supply is just being squeezed. We're in a massive housing supply squeeze. It's absolutely nuts. And a lot of people think that this squeeze is going to be alleviated by the foreclosure crisis that's imminent. Look, the foreclosure crisis that happened in 2008 is because loans were just given to anybody. They didn't care if you could pay your loan back. They didn't care if you had numbers that could say you could pay your loan back or that indicate you could. As long as you said you had enough money, they just gave you a loan, and a lot of people went belly up with balloon payments, crazy adjustable interest rates that after a couple of years, their payment went up so high they just couldn't afford it at all. Boom, their house is underwater. The housing market tanked at the same time. All these houses came on the market. Houses became very cheap. There's no reason that this many houses are going to come on the market again, and even if they did, look at this number right here. This is 1.2 right here. This is 1.2 months of inventory for the county that I live in, Bergen County, right here in New Jersey. We can see that in 1.2 months, all the houses are going to be absorbed if no new houses came on the market. That means we're literally a month away from being sold out of houses. Typically, to see a balanced market, we need this to be between 5 and 6.9. So with that, we can actually see we need housing, we need the supply of inventory to double and even triple to get to a balanced market. So first of all, the foreclosure wave isn't even coming. You can see that right here. Foreclosure wave not in the cards as mortgage relief programs end. So we're not even going to have a foreclosure wave that's going to bring the active inventory up to get us a higher absorption rate, months of inventory. You can actually see down here, 73% of borrowers currently in foreclosure have 20% equity or more, which means that they can just sell. So foreclosures are not going to be necessarily happening. And then, of course, we have even more catalysts to show that the housing prices are here to stay and they're actually going to keep on going up. These two are super huge. A lot of people just say this and overlook it, but we do have a construction material shortage, and it's expected to continue not only in 2021 but in 2022 as well. 71% of contractors surveyed face at least one material shortage, which is absolutely nuts. Lumber was the most cited at 31%, followed by steel or electrical supplies and copper wire and lighting supplies. So that means that builders, contractors, they can't even get the materials that they need to construct houses, to remodel houses, to bring houses to the market like they want to do. That's their job. They can't even get the materials. And when they do get the materials, there's such a shortage, prices jacked up. And with all the stuff that's going on in the world right now, it's hard to say that this is definitely going to get fixed. It's very hard to say. So we also have not only a material shortage, but a skilled labor shortage, which is spurring action from the construction industry. Check out this stat right here. The federal government currently spends only $1 on career training for every 6 that it puts into college prep, despite the fact that only 1 in 3 jobs requires a college degree. That means, and everybody knows this, every single parent has wanted to send their kid to college over the past 20, 30 years, because 30 years ago, if you had a college degree, that meant that you were going to be well off. There was a huge shortage of people with college degrees, and there was a huge demand for jobs that needed people with college degrees. Now we're in the exact opposite situation because the college degree market has become extremely saturated with literally everybody going to college. I went to college. I don't even work a career that I need a college degree in. So you can see that everybody's going to college, but nobody wants to do skilled jobs anymore because it's looked down upon in society as blue collar. Why would you want to be blue collar if you could go to college and be white collar? And if you actually want to get into skilled labor, there's a ton of opportunity, but nobody wants to do it. So these are all factors that contribute to the reasons that the housing market's going to go absolutely insane next year. There's no indications of a market slowdown. If we saw a boost in interest rates, right now they're sitting about 3.25 to 3.5. If we saw that go to the 5% area, a $400,000 house would have about a $270 increase in monthly payment. So that could definitely price out some buyers who are maybe looking to stay around the $2,500 to $2,800 price range, and all of a sudden the monthly payment is $3,100 a month. It should alleviate some of the huge buying pressure, huge buying demand, but there's really no indication of that even happening yet. So at the current moment in time, here in December of 2021, my prediction is that housing prices, I think they're going to go up at least 10% in 2022. We're going to check that out. We're actually looking at the number right here. This is the median sold price in New Jersey, in Bergen County, for year to date. So if this $620,000 goes to $682,000 by the end of next year, that means my prediction will be right. We're going to check it out. Thank you so much for watching this video. Please drop a like on the video. Please subscribe to the channel. That stuff really helps out quite a lot. I appreciate you guys being here. Hope you got something out of it. And I'll catch you guys on the next one. Bye-bye.